Hey guys, good afternoon. It's Angelo Christian Financial. Today we're talking about student loans and the effect on when you're buying a home and getting a mortgage approval, how it affects you based on the type of loan that you're getting. And the reason why I'm bringing up this topic is because millions of Americans have student loan debt and they don't realize it because, when they're going to college or happy, they're trying to get their degree in pursuit of their career. And when they go to buy a house, they don't realize the ripple effects and how it can affect you for getting approved for a mortgage loan. So depending on the type of student loans that you have, depending on the type of loan that you qualify for, can actually affect you for how much you can actually purchase for when you're trying to qualify for a home. And it's really true. So we're going to talk about the implications of student loans and the different type of ways you can restructure your student loan debt so you can get approved for your home loan program. So the biggest thing is we're going to look at the different loan options today and compare what's acceptable for those guidelines for example, FHA, VA, USDA, conventional, what's allowed for the different programs when you're trying to get pre-approved for that particular product. So for example, with an FHA loan, when you're trying to get approved for this type of loan, they'll either do 1% or a fixed payment plan for your student loan debt. Okay, and we'll go over the examples of what this means in a practical example you can actually see, so you can actually see how it affects you when you're trying to qualify with your debt to income ratio. VA, for example, is very lenient and forgiving on the veteran. They'll accept a deferment. That means the student loans can be deferred out to the future. They have to be deferred for at least 1 year, or they'll accept an income-based repayment plan. And sometimes that income-based repayment plan can be zero, which can be very beneficial in helping you to qualify. Conventional loans, they'll accept an income-based repayment plan, but they also accept a fixed payment plan, but they will not accept a deferment. And you also notice that with FHA, they will not accept an income-based repayment plan. So what does all this mean? Well, if you're trying to get a home loan, and let's just say that you have $100,000 student loan debt, I'm just going to erase this right here so that way you can, I think you probably wrote that down. Let's say you have $100,000 in student loan debt. I'll give you an example of what exactly I'm talking about. So let's say that let's just say you make $70,000 in income. Okay, you want a $300,000 home. Okay, and the payment on this $300,000 home is $2,000 a month. The student loans you have are $100,000 equal $100,000. Well, let's say you're trying to get an FHA loan. If you take 1% of $100,000, that's $1,000 a month that's going to go into the debt ratio. Now, what happens is that when you add that $1,000 into this, to your total debt ratio, it may affect how much you can actually get approved for, because with an FHA loan, the maximum debt ratio allowed is 55%. Remember, with FHA, you cannot do an income-based repayment plan. You cannot do a deferment, right? So what I recommend with my clients that we do is we move the student loans to a fixed payment plan, an extended fixed payment plan, so it'll be cheaper than $1,000 a month, because 100,000 times 1% equals 1,000 per month. And that goes into your debt ratio. All right. But if you do a fixed payment plan, it might only be 600 per month. Okay. I want you guys to follow me here. So you do a 1% multiplier, it's 1,000 per month. A fixed payment plan is $600 per month. That's going to lower your debt to income ratio much lower than a 1% multiplier. Okay. So that's very important, because if you're trying to purchase a $300,000 home, you may not qualify for that with a 1% multiplier into your debt to income ratio for FHA. Now, if you're doing a conventional loan and you apply for an income-based repayment plan, and that payment is $0 or $100 a month, that can definitely be beneficial. But with a conventional loan, the maximum debt to income ratio that you can have is only 45%. So that's one of the things you have to keep in mind when you're applying for a conventional loan, is that you have to have a higher FICO score, usually at least 660 or higher, a lower debt to income ratio. So the key thing here is knowing that if you're applying for a loan, how these different loan programs, how they can affect you. Even like with USDA, it's the same thing. USDA is either 1% or fixed payment plan. Okay. So the thing that I want you to think about is to be mindful of is that if you've taken on a lot of student loan debt, you might want to think twice about doing that, because if you're trying to buy a home, it will affect your qualification. And if you do have a lot of student loan debt, apply for an extended fixed payment plan to lower your debt to income ratio, or try to get a conventional loan and move that student loan debt into an income-based repayment plan. So that way you can take that out of your debt ratio to actually qualify. Because if you do the 1% multiplier, chances are you're not going to be able to qualify for the house that you want. And that's the key takeaway of this video. So remember, we've been lending in America for over 2 decades. It's where America goes for funding. You can call or text our office at 832-431-6331. You can also click on the link down below in the YouTube if you want to get signed up to get pre-approved. We're actually open 7 days a week for you. We're a nationwide commercial and residential lender. We do all kinds of loans, jumbo loans, HELOC loans, conventional, FHA, USDA, commercial, multifamily, anything that we can help you with funding with Angelo Christian. We're here for you 7 days a week from 9 a.m. to 9 p.m. Call or text our office. We can help you to restructure your credit, your loan, whatever we have to do to get you pre-approved. We want to help you in any way that we can. Please, we work really hard to grow our channel, push this information out to the world, to share this information. We try to educate and empower people. If we can help you with a mortgage loan, please reach out to us, guys, and check out my next video, everyone.